Hi, everyone. Welcome to the IEEE's Society on Social Implications of Technology's very first Google Hangout. Joining us today are John Villasenor. He's a professor at UCLA of Electrical Engineering and Public Policy. Also joining us are Manish Gupta and James Blaha. They're the creators of the DogeAPI, which is an API for interacting with Dogecoin, which is one of the, why don't you tell us a little bit about what your experiences have been and what you think about cryptocurrencies in general.
Okay, I'm Manish Gupta, and this is James Blaha, and we're creators of DogeAPI.com, DogeAPI. It's basically a service which allows merchants and consumers to create an account and exchange Dogecoin.
So yeah, it's pretty much like the PayPal of Dogecoin. We allow merchants to sell their services quickly and easily with plugins and widgets and access to our API. The reason we started this was that we kind of thought that the driving force behind whether or not a cryptocurrency is successful is what you can use it for. So we wanted to make a service that would make it really easy to use it for anything. Yeah.
Right here.
So I think Dogecoin has been picking up a lot of interest lately. It's got the second biggest community. And
Yeah, definitely the fastest growing community.
Yeah, the largest trading volume. So that's one of the reasons why we were really interested in Dogecoin to begin with.
Thanks, Manny and John. Manny and James, sorry. So I think we have John back on the line, and I think we can hear a little bit from him. So John, do you want to tell us a little bit about your thoughts on cryptocurrency in general?
Okay, let me just try to make sure, first of all, can you hear me okay this time? Okay, great. So if we don't get feedback here, I'm just going to give a kind of a brief overview of the cryptocurrency ecosystem, a little bit how it works, maybe 5 to 10 minutes. The assumption will be that that people perhaps have heard of it, but maybe aren't using, if you're someone who works with cryptocurrencies when you have a cryptocurrency startup, you might know a lot of this stuff. But let me just start with a very high-level description. First of all, let's take a big step back and talk about what currency is. And most currencies that we're familiar with, like the US dollar, are what are called fiat currencies. In other words, FIAT. These are currencies that are issued by a country like the United States, or Japan, or China, or sometimes by a region like Europe, of course, has the euro. In addition to fiat currencies, there are non-fiat currencies. In other words, currencies that are issued by entities that aren't governments. And so a common example of something like that would be frequent flyer miles. Are in some sense, have many of the attributes of a currency, but of course they're not issued by a government. But frequent flyer miles are centralized in that there's one company, for example, an airline, that controls that currency. By contrast, cryptocurrencies like Bitcoin, sometimes also called virtual currencies or digital currencies, these are managed in a decentralized manner. There's no one person or entity or country that controls a currency like Bitcoin. Instead, Bitcoin is managed through the collective processing power of a whole bunch of nodes, really thousands of nodes on a network distributed all around the world. So what I'll do is I'll explain a little bit about Bitcoin and how it works, again, at a very high level. And to understand how Bitcoin works, it's helpful to take a quick step back and very briefly mention a concept called public key cryptography. So everyone is probably familiar with the basic concept of cryptography, where you can encrypt information, and then if you have the right key, you can decrypt information. And public key cryptography is actually quite many dates from decades ago, but it's a really interesting approach to cryptography where there are pairs of keys. So you would have a private key that you keep secret all to yourself, and a corresponding public key that you can give to anybody in the world. And so anybody who has your public key can encrypt a message that only you could decrypt using your private key, and it also works the other way around. you can use a private key to encrypt a message that can be decrypted by anybody who has your public key, but only could have been encrypted by you. So that's really important to understand sort of the way Bitcoin works. So the way Bitcoin works is each Bitcoin has a value, and it's a value determined by whatever people are willing to pay for it, just like a stock on the stock market. And new Bitcoins are created by what is called mining. So people can run some computer processes to try to create new Bitcoins. So we'll talk about that process in just a minute, but suppose that I've gotten somehow or another, I've gotten some Bitcoins, and Bitcoins, by the way, can be traded in increments as well. I can send someone 1/100th of a Bitcoin, or 5 Bitcoins, or 5.61 Bitcoins, any within reason, any subdivision I want. So let's suppose I have some Bitcoins and I want to transfer them to somebody else. The way I do that is I basically broadcast a message to the whole network. And I say, I've received some Bitcoin, so I can prove to the network that I actually have the Bitcoins I'm going to transfer. And I say, I'd like to transfer, let's say, 2 Bitcoins to the person whose public key is such and such, and I sign that message using my private key, which basically authenticates that I really am the one who provided that request. And that message gets transmitted to all the nodes on the network, and those nodes then process that message and group my transaction with a bunch of other transactions, and every 10 minutes or so, all the transactions that have occurred in the last 10 minutes get kind of grouped into what we call a block, and once that block is solved by a miner, then that block gets added to the thousands of previous blocks that go all the way back to 2009 when Bitcoin was first launched, and that transaction, at least for that moment in time, is considered to have been verified with this processing. To be really safe, people usually wait until there's sort of 5 or 6 blocks downstream before they really say, okay, the transaction that's in this block, it was followed by transactions in 5 or 6 other blocks, so I'm really confident that this isn't going to be reversed. So you might say, well, how do people actually validate these transactions? What happens is all these nodes in the network have all the transactions from the last 10 minutes, and they put all that information together, and they basically add to that a guess of a random number, and they create what's called a hash function based on that. And if that hash function is in a certain range, then they validate that block. They get 25 new Bitcoins, which today, since Bitcoins are many hundreds of dollars a piece, gives them a very strong incentive to actually validate these transactions through the mining process. There's lots more that can be said, but I think I'll probably stop here and say the rest of it in response to the questions that I assume that we're going to
have. Thanks, John, and James and Manish as well. I think those were really great introductions. So we have one question already, and the question is from Varun Sood, and he asks, why do we need cryptocurrency?
Okay, well, I can take an example. Rather than argue why we need or don't need, I'll discuss some of the advantages that cryptocurrencies have offered, as well as some of the concerns that have been raised. On the advantage side, cryptocurrencies like Bitcoin are making it possible to transmit money with very little overhead. If anyone here listening to this has ever tried, for example, to move $500 to Europe, convert it, say $500 US dollars, and convert that to euros, and if you want to give somebody in Europe the euro equivalent of $500, as you know, using many traditional mechanisms, that process can both take significant time and there can be significant overhead. You even see this, for example, when you exchange money at an airport if you're traveling overseas, or if you use a credit card overseas. Just the act of moving money across a currency to different currencies has a lot of overhead. By contrast, structured properly, Bitcoin transactions using traditional currencies but done via mechanisms via the intermediary of Bitcoin can be done in a far more efficient way in terms of overhead. So that's one argument that some people offer in terms of why cryptocurrencies offer some really interesting advantages. To be fair, I think it's also to point out that there are some people who criticize cryptocurrencies because they assert that because they are synonymous, in other words, because the identities of the people behind the transactions aren't necessarily apparent, that could lead to their abuse for criminal financial activities, although that is certainly also true of many mechanisms for moving money, not only cryptocurrencies.
Yeah, I think the reason we need it's a question of control and who has control and who has power over our ability to make transactions over the internet. So if we're tied to the US dollar and we have to use US dollar through PayPal, then PayPal has a lot of power. Who they say can use their service affects what kinds of services are available on the internet. If we have to use the US dollar, the government has a lot of say over what kinds of services are available over the internet. And so cryptocurrencies offer a decentralized, kind of a democratic way of saying, you know, there's this currency that's only backed by people's willingness to use it. And so the ones that allow you to do the things that people want to do will be the ones that succeed.
So I feel very much in the minority here, in the sense that I actually think that cryptocurrencies are a bit of a bubble. And so one of the things I've been thinking about is the fact that, you know, as we've seen in the recent, you know, some of the recent issues with payment processors, you know, shutting down and, you know, losing everyone's money, one of the issues of regulation has come up because, you know, when some of these things happen, people go to their governments for regulation, and, you know, the regulators say, well, these aren't things that are under our domain. And, you know, so I guess one of my questions to both of you would be, you know, do you think that cryptocurrencies can succeed without regulation? And this is sort of a companion question. You know, is that idea that I have that that currencies need to be regulated, is that idea just totally outdated? So maybe, John, you want to let us know what your thoughts are first?
Well, I think, you know, there's a bunch of things that could be said in response to that. You know, I think the fact that Bitcoin, not only Bitcoin, of course, there's other cryptocurrencies as well, although, of course, Bitcoin is the largest in terms of market cap. The fact that Bitcoin that ecosystem has grown the way it has already, that already is really, really interesting. 10 years ago, or even 5 years ago, if people had suggested that it was going to be possible to have a currency managed in a distributed way, reliably, generally, although not always, safely, you know, without any central oversight authority, many people, just from the pure technological standpoint, if we even put aside the regulation issues, would have said, no, that's not going to be possible. And of course, you know, today, and in most days, the volume of transactions, the daily volume in Bitcoin is $100 million or more, and sometimes much more. And so already there has been this really fascinating existence proof that it is possible for these currencies to have, you know, very significant, to reach critical mass. You know, whether Bitcoin itself will still have the value it has today a month from now, or 2 years from now, or 10 years from now, of course, it's really hard to tell. It could be much lower, it could be much higher. Although that's also a true statement. That statement could also be applied to a lot of stocks and commodities that are traded these days as well.
And U.S. dollars.
I'm sorry?
And U.S. dollars, too. I mean, that could go up or down wildly in the future.
Yeah, I mean, obviously the value of the dollar does fluctuate, not to the extent that Bitcoin has fluctuated, but you know, I think it's important that there are legitimate concerns that are raised about things like stability and so on with Bitcoin, but almost always, you know, with the exceptions of pseudonymous pieces, almost always those same concerns can be applied, you know, frankly, to cash, right? And in fact, cash is anonymous, but that's probably the wrong example. So, you know, it is true that you know, there have been some problems. I mean, obviously, anybody who watches this field, this area, knows what happened to Mt. Gox, and that's obviously, you know, of significant concern. I think it's also important to focus to again not lose perspective of anyone who, if we talk about traditional dollar-denominated purchases with credit cards, well, there were tens of millions of credit cards that were purportedly compromised by people who shopped at Target Thanksgiving and before kind of mid-December. And so I illustrate that just to show that anytime you have a complex system for moving money, there are vulnerabilities, and yes, there have been problems with Bitcoin-based exchanges, and I'm not defending Mt. Gox or anything, but I'm just saying that this is in some sense inherent when you have money being moved around. There are going to be there are banks that have failed, traditional banks that have failed, and Mt. Gox failed. So I think the ecosystem is still very young.
Yeah, I think it's important to realize that even if Bitcoin has some serious bug no one's figured out and it totally dies, that this idea has been proven well enough that something else will take its place. So I think that the idea of cryptocurrency will not disappear. Bitcoin may or may not be worth anything, but some cryptocurrency will be in use, and probably more in the future than today, is what I would say.
And the other thing, if I can talk here, a couple of other comments that I'd make. First of all, Bitcoin is a currency, it is true, but it is also a really interesting protocol that goes well beyond currencies. And for example, I've written about how it could be used to transfer assets with respect to digital rights management. In other words, if somebody wants to make it possible, for example, a copyright holder wants to make it possible to sell a digital access to a song while ensuring that the seller didn't also hang on to that same access, the Bitcoin protocol offers mechanisms to provably transfer digital assets without the original holder of that asset hanging on to them. So there's a whole host of really interesting applications that go well beyond currencies here. My video just went off. I don't know if that's that go well beyond. And with respect to regulation, I guess the other comment I'd make is that I fully understand the concerns that regulators have about any mechanism for moving money. I mean, if people can anonymously move what could be millions of dollars, then obviously that ability is going to sometimes be misused. I think the proper approach to regulation is balanced in the sense that over-regulation, not only with cryptocurrencies, but really in almost any context, tends to stifle innovation and slow economic growth and basically impede creativity and growth opportunities. At the same time, I think it's unreasonable to state that regulation is never good, right? And we can all think of we want regulation. Somebody who claims they're a medical doctor really does have medical training and have the ability to dispense that training. So I think regulation is sometimes warranted, and I think for the most part regulatory authorities are trying to approach cryptocurrency regulation thoughtfully and carefully, and they won't always get it right, but I think they're generally trying to be thoughtful if you actually talk about the expression I get.
And I'd like to point out it's not totally unregulated. There are different versions of the software. So like for Dogecoin, we had two different versions of the software that different people were running, and there was a fork. So there were basically two blockchains running side by side, and how it gets decided which one is correct is basically the more people who switch to one of them, that's the one that wins. And so the people running these services basically democratically decide which version of the software to run. And so if the people releasing the software do something that the community doesn't support, they won't switch. And so no single person is actually in control. It's really a democracy of saying we want these changes because they help the community, or we don't want these changes because we think they won't help the community.
And I think maybe I'd say one other thing about regulation. It's not as if there is no regulation. We have something in the United States. We have something called the Bank Secrecy Act, BSA, which dates from the 1970s. And then within the Department of Treasury, there's a portion, a group, an entity called FinCEN, It's FIN and capital CENs. It's the Financial Crimes Enforcement Network. And they've come out with specific guidance on what they call virtual currencies. I mean, of course, there's different terms. Some people say cryptocurrency, some people say virtual currencies. They call these things virtual currencies. And under that guidance, which they released about a year ago, they basically define users of cryptocurrencies and exchangers and then administrators. Exchangers being entities that change cryptocurrencies for fiat currencies like the dollar and back and forth. Administrators being groups that issued such currencies, and users being someone who might, for example, use an exchange to change dollar into Bitcoin and then buy something using the Bitcoin. And they very specifically said that exchangers and administrators were subject to what are called money service business, MSB, regulations, which impose obligations with respect to reporting and record keeping and so on. And so a point to be made is that we have substantial regulation on the books related to financial activities already, and some of this is not going to be a question of creating new laws, but simply clarifying the extent to which existing banking and financial regulations can be applied to new mechanisms for moving money, and I think the regulators are looking at that right now.
Okay, thank you. We have another question, and this question is it's asking about two different currencies. It's asking, sort of which one is better, Bitcoin or Litecoin, in terms of mining activity and various things. And what I thought was interesting about this question in particular is there's been, such an explosion of all these different types of cryptocurrencies, and I was wondering both of your thoughts on, whether this is an ecosystem that's going to continue to exist, where there's going to be several different currencies, or do you think that one is going to decisively win, and one thing will corner the market? So, John and Manish, you worked on sort of the second largest community. So why don't you give us your thoughts first?
Well, I'd say Dogecoin would be better, but and Dogecoin is based off Litecoin, right?
Yeah, it's a fork of Litecoin, which is a pretty close fork to Bitcoin. I mean, really, all the coins are a close fork to Bitcoin. The differences are relatively minor. I would say which one is useful for mining. I've done a bit of mining, so right now, unless you want to buy an ASIC, which are fairly expensive, you shouldn't do Bitcoin mining. If you have a GPU that you're not using already, if you have a graphics card, then Litecoin or Dogecoin or any of the other script coins, that's the algorithm they use instead of SHA-256 for Bitcoin. So basically those coins were designed to allow GPU miners to still exist, which means to allow smaller miners to still exist, people with less money. Your average crypto enthusiast can mine those coins. And what's actually happened recently there are these multi-pools where they automatically calculate which coin is most profitable to mine, and they'll switch automatically for you. And so you can just set up a multi-pool, mine through it, and it'll switch the coins that it's mining, and then you can automatically send those to an exchange to convert it into Bitcoin or dollars or whatever you want. And so I think we are really going to see an ecosystem emerge where these altcoins, alternative coins, non-Bitcoin coins, are competing for this multi-pool traffic by convincing users they're going to be the most valuable in the future.
So, and let me just add to that I basically I agree to the extent that there are certainly going to be altcoins, coins other than Bitcoins. I think just as you see in lots of domains, there's a network effect, which means that the large market share is going to be held by a relatively small number of these. In other words, for example, if you look at search engines, right? I guess in theory there probably are hundreds of different internet search engines out there, but of course the overwhelming majority of the traffic goes to places like Google and maybe Bing and one or two others. We don't need 500 different companies doing what Twitter does, right? So 500 different companies doing what Facebook does. I mean, there are lots of companies that do this, but a small number of players ends up dominating pretty much most markets, not all markets, but most markets. And I think that we'll see that here with these cryptocurrencies as well. Right now, last time I looked, there were, I can't remember, 80, 90 different cryptocurrencies. I mean, but if you actually look at the market cap of these cryptocurrencies, the overwhelming majority of them are very thinly traded, very low market caps, and so there's really a handful that are dominating most of the activity in this. And I think that's going to be the way it stays, although the members of that kind of more popular club could change. I mean, some of these altcoins that aren't as popular today could end up being really popular 3 or 4 years from now, and similarly, some of the more popular ones could end up falling out, and it's really impossible to predict how that's going to shape up.
They're also not always direct competitors. So, like, Namecoin does DNS in addition to being a cryptocurrency, right? And I think we're going to be seeing a lot more of these coins, like you were talking about, how it could be used, to transfer IP or to transfer rights. I think we'll see lots of specialized coins designed to do things that people find useful, and then the market cap will be related to how much, the world is willing to pay for those services, kind of.
I think that's a terrific comment. I agree completely.
So I have one question, and you guys have been talking about these in terms that I think of and recognize as being commodity terms, right? Market cap, trading volume, all of these things. These are things we used to talk about, oil and pig futures. So, and a lot of the existing market activity in regard to Bitcoin is traders. They're not people. There aren't very many people who receive their salary in Bitcoin. I'd be very surprised if there are any. But so we call this a currency, but I feel like it isn't really there yet. It doesn't have the instant exchangeability. It doesn't have the it doesn't have a lot of the things that I think of as being synonymous with currencies. So, and from a lot of how you are talking about, both of you are talking about, future uses. Again, they're not they're more like, this is an instrument. This isn't necessarily a currency. So I'm wondering, is that something that you think is something that we're going to stay in right now, and that well, it's a commodity now, but I think it could become a genuine currency, or do you think that they're going to stay as commodities forever? So, John, why don't you take this one first?
I guess I'll respectfully push back and say that in many, Bitcoin in some ways is absolutely a currency. If you look at the definition, there's various definitions that the economists give of money, but typically the definitions are 1, a store of value, 2, a medium of exchange, and 3, a unit of measure. And you can argue about the store of value piece of it, because you could say, well, hey, it's so volatile that it really doesn't rely on the store of value. And reasonable people could take different sides of that argument. But in terms of a medium of exchange, I don't think there's really any basis to argue against that. I mean, in the sense that there's plenty of I mean, I agree that most people aren't getting their salaries using Bitcoin, but that's not because Bitcoin is incapable of moving money. It's because for lots of other reasons, including regulatory and tax and other reasons, companies are very hesitant, understandably so, to sort of convert everything over to Bitcoin. I'm not arguing that the U.S. government should start paying everybody in Bitcoin right now. But one of the things that you do with money is it's a medium of exchange, and there's lots of legitimate there's coffee shops that accept Bitcoins. There's plenty of businesses that accept these things enough that I think it's a legitimate claim to say it's acting in that respect as a currency, at least in some instances.
Yeah, and I think for us, there's an auction site built on top of our API. They're actively trading goods all the time. There's a bunch of services. Yeah, tipping on social networking sites is the reason why Dogecoin got big, and I think there was no mechanism to say, I value the content you provided to us, so I want to give you $1. Even Bitcoin couldn't give someone 50 cents because the transaction fees are too high. So that's one of these situations where, since Dogecoin's transaction fees are so low, someone just donated $14,000 worth of Dogecoin to a charity, and they paid less than a cent to do it. You know, and that would have been true if they transferred 50 cents too, or 10 cents. It gives this new method of contributing to people in a small way that, because normal avenues would have such high fees, was never possible before.
And let me just second that by mentioning another, again, agreeing about the transaction fee issue and mentioning another aspect of the Mark Andreessen, who's a venture capitalist now, in the old days was also known for being one of the founders of Netscape. He wrote an interesting piece in the New York Times about, I guess now it was about 2 months ago, and he was pointing out one example. With these cryptocurrencies, it's possible, for example, to pay 1/100 of a cent. And now you might say, well, what good is it, to pay 1/100 of a cent? Well, one example is to prevent spam, right? If you were to charge people 1/100 of a cent to send an email message, none of us would really mind if we pay 1/100 of a cent because we don't send that many email messages. But if somebody is trying to send, 20 million email messages, then they might have a real, that might be a disincentive to them. So these cryptocurrencies make it possible to sort of engage in microtransactions in an efficient way. Like, we're really just beginning to think of all the ways that might be applied in very concrete and interesting ways.
Yeah, I would expect to see it in video games very soon. I think instead of getting all of these games make their own virtual currency that's not tradable for dollars, right? It's only tradable for in-game items in their own game. But with cryptos, we can easily see a situation where players can play games, they'll earn money, they can spend it in that game or in other games or exchange it on the exchanges for other currencies. And so this whole idea of being able to do lots and lots of these little transactions at very low cost opens up all kinds of new things that we never even considered before because it just wasn't possible.
Thank you. Okay, so we have another question. Here's the question. In Dogecoin, how can we say it is secure? Because there was a prediction of fraud in Bitcoin of 2 blockchains running together. I don't know the specific details of that, but maybe you do, or maybe you want to talk about Dogecoin, or rather,
He's talking about a fork.
Yeah, we actually did have a fork that happened in the blockchain just a couple weeks ago, maybe more, and it did cause some confusion, but it was it got fixed after everyone updated, but there were some inconsistencies in the transactions.
And maybe for the benefit of those who may not know what a fork is, as I explained before, you aggregate a bunch of recent transactions into a single block, and that block refers to the previous block, which in turn refers to the previous block, and so on. And that goes all the way back to the beginning of the currency. The challenge is when you're creating a new block, suppose 2 different people basically assert, person A says, oh, I got the new block, and person B says, no, I've got the new block. And so you have one block that then feeds into 2 new blocks, and each of those new blocks could then have descendants of their own. And so that's called a fork because it's at least temporarily not 100% clear which block is which branch is going to survive. And so obviously for the reliability of the currency, that needs to get resolved, and preferably as soon as possible. And once that gets resolved, then one of the branches will disappear, and then the remaining one becomes the branch that everyone in the network agrees is the actual ledger you have.
So here's my concern about that, and I think this touches into some of what my real questions and hesitancies are about some of these virtual currencies. That makes total sense. I know what a fork is. I'm a software engineer. I feel like if everyone had the level of knowledge that is necessary to, say, just mine bitcoins, then this could totally work. But I feel like the level of knowledge that's required to have a secure wallet, to in order to work with these currencies, to make a decision of, okay, well, which currency should I mine? these are all quite the kinds of things that, forget about they're not accessible to every layman now. They're always going to be specialized knowledge. I feel like if these are ever going to be something that someone would receive their salary in, John, you mentioned that there are coffee shops that take Bitcoin. That's sort of true, and it sort of isn't. There are a lot of businesses that will offer instant exchange from Bitcoin to U.S. dollars or some other currency that they can pay their bills in. There aren't a lot of places that take a virtual currency as a virtual currency, and that distinction may seem meaningless, but it's actually I think it's really important. So I guess what I'm wondering is, do you think that this is something that we're going to get over? That like some of these technology requirements are going to, we're going to sort of get beyond them to the point where other people don't need to know what this is, or do you think that this is always going to be built in to these currencies? So, John and James and Manny, why don't you tell us what you think?
Well, let me start by saying, in anything having to do with financial stuff, it's never a good idea for anybody to use any financial mechanism or tool or anything that they don't really fully understand the risks, and that would be true for anything, including Bitcoin. So I would be the last person to advocate that everybody change their dollars for Bitcoins and just unless they really understand. I'm not advocating that at all. That would be a bad idea for someone who doesn't really understand things. Second of all, I think it's important, to emphasize that miners are only a subset of people who use these cryptocurrencies. So, it is true that mining involves typically not only processing power, but you have to sort of know how to do it. But the validation of the transactions, which is really what mining is about, doesn't prevent people from engaging in the transactions that are being validated. I mean, so for example, when I use my credit card to buy something at a grocery store, I don't need to be familiar with all the back-end processes that are being used to validate that transaction at the payment processor, credit card company, whatever. I just need to know from a user standpoint how to use that. So I think the question of the expertise required for miners is a separate question. That said, you're right, in order to become a user, there is an added barrier over and above if you're just using U.S. dollars. And again, I couldn't emphasize enough that people shouldn't use any of these currencies unless they are fully understanding of the risks that they might involve and how to use them and to have to be aware of those risks and to use them knowing those risks. But again, that same advice would apply. I give that same advice to buying pork belly futures, right? I mean, you shouldn't do that either unless you're aware of what the risks are involved to do that.
Yeah, and I think the people who have to be knowledgeable about the forks or the security risks or updating the software are the administrators, the exchanges, the people who are processing the vast majority of these transactions. And so if someone goes on our site and they get a wallet, they don't have to ever know any of that stuff. All they have to know is they have some coins, they sent it here, and then they sent it to someone else and they got something.
Yeah, although I'd politely push back on that by saying that people who trusted Mt. Gox in that manner ended up losing, almost certainly losing their money. So some diligence obviously is.
But people have to trust banks today. I mean, it is a problem that these places are the weak link, but they're also part of the solution for the technical side of things.
Right, but the difference is if a bank, at least in the United States, if a bank fails, there's obviously well-established FDIC and other protections that for a lot of classes of depositors would provide a backstop. Whereas, of course, even for Mt. Gox case, that fails, and there's really there's no. I mean, part of regulation. There's a lot of reasons we regulate stuff, and one reason is to prevent crime, but another reason is consumer protection. And I think it's probably an uncontroversial statement that there is still less consumer protection in the cryptocurrency ecosystem than there is in the traditional financial ecosystem, and so that remains an issue.
Yeah, but I mean, anyone who has like a serious amount, like a lot of money in these cryptos, should know enough to store it themselves safely and shouldn't trust a third-party site. You know, on our site, we tell people don't store a lot of money with us. You know, only use our site as a way to accept money through your website and then put it into your safe wallet. Because it is true that these third-party sites, Mt. Gox, any of the exchanges, any online wallets, they are a somewhat dangerous or risky place to keep your money. And anyone who was keeping a ton of money on Mt. Gox, I think, was making a bad decision, right? They should have only kept in as much as they wanted to exchange and not leave it there for any amount of time. So I guess that comes back to the user should be educated, right? But I think for a brand new user who's playing around with it, who doesn't have a ton of money in it, it makes a lot of sense to use these sites to get used to it, and then they can learn, oh, this is how I safely store it. It's actually not super hard. You know, it take a 10-minute tutorial, safely, make a paper wallet, and learn about that.
The clients, the desktop clients could definitely be a little more simple. They could be simplified. But I think the services like DogeAPI, they offer a good bridge to transition simple users into more knowledgeable users.
Well, thank you both for being with us. Our 45 minutes is up. I think this has been a lot of fun, and I certainly have learned a lot. So John, James, and Manny, thank you all for joining us, and hopefully I'll see you all again soon.
Thanks
Bye.
for having me. Thank you.